But here's a thought. So empires rise and empires fall. Where do you think the US is now? Because it seems to be countries which are aligned to the dollar are struggling. Great for gold, but not so good for everyone else. And some of the countries that are aligned to China seem to be doing just a little bit better. So is this a pivotal moment in the global economy, or will we get through this?
Well, we'll get through it because America has this unique DNA of adapting. As Winston Churchill said, the politicians will always have the greatest punch out, but that wisdom of crowds, that final decision is usually the best decision because they really punch it out. And I sort of believe in that. Coming from Canada, where everything's yes sir, no sir, please and thank you, political correctness, everything you say. In America, you just call it as it is. So I really think that the freedom, the culture of America will still has a lot longer legs to stand on than a lot of gloom-sayers. But I think what's important for us to talk about COVID, I believe it's World War III. When you have a world war and the enemy right today is invisible, it's not visible, and it's everywhere around the world. So what's happened since Obama's day, if you go back to the year 2000, the G20 countries got together and they all talked about global trade, global trade, global trade, drop barriers to entry, drop barriers to entry. Along comes Obama after the crisis of '08, and it's now synchronized tax and regulation. And today it's World War III, this coronavirus, and how different people are adapting and changing. Is the data collection correct? It's being weaponized as a political issue in America because of big election year. It's to recognize that. But push that aside, all the G20's finance ministers and their central bankers are functioning like a cartel. They are not competing with each other like in the 70s. The Italian lira versus the French franc versus the British pound versus the US dollar. No. It's basically all shaking hands. Okay, we're all going to debase the currency on a relative basis. And the formation of capital is totally morphed. In the past 10 years, you can really see who would ever think that Japan would all of a sudden raise money, zero interest rate, no one buys it, the government buys it themselves, they create this funny money, and they buy 15% of their stock market. They buy real assets, and they're buying it through an ETF. Switzerland does the same thing. They float all this money. No one's buying it, so they create the money and they buy Cadbury's because the dividend yield's higher than what they have to pay to service their own position. And they're buying Microsoft and they're buying Apple. This is a game changer. The Federal Reserve cannot buy directly shares in public companies, but they can stabilize markets through the futures market, and they're turning around buying ETFs now. Now we saw in March all of a sudden rates collapse. But banks wouldn't make loans, so the second tier financing, mezzanine funding, went to 14%. That's not good for the economy. Immediately, the Fed comes in and starts buying ETFs. They're buying muni ETFs that get the burden off of states rolling over their tax-free bonds. They take the burden off of corporates. This is very, very different world. Greenspan leaves, and people complain about him, and the Federal Reserve was 6% of the GDP. Today, under Powell, it's now over 30% of the GDP. And he says, we're going to forcefully, proactively, and aggressively basically print money. He said this 3 weeks ago. This is very, very different. So I see gold rising on all currencies. And I just see it slightly different than the other, as all these different countries have different ways of fighting the coronavirus. And so I think that gold as an asset class is rising. And we're also seeing real estate. Real estate in San Antonio was up 70% in sales last month over this month, or sorry, June over July. In May, there was up against April. Who would think that? You can't go visit the houses, lockdown. But people are buying on the web, like they're buying their food on Amazon. So we do have this debasement, currency debasement, and that's what makes gold this beautiful, unique asset class.
It is. And I recognize a little bit of, if you sell nails, a hammer is always the solution here. So I do want to have bit more of a rounded discussion about the economy with you here. So the Fed, and I was going to ask a bunch of questions, but you beautifully answered some of it. It's like, well, what else should they have done? Could they have done to not put the US in this position?
Well, it's so difficult because it's an election year. I've seen things weaponized so easily in America and capture the imagination of the media. So let's take a look at every year. I'm so blessed. I go to Harvard with 180 other CEOs from 50 different countries, and we study cases. We become kids again. We stay in a dorm. We have these class studies, and 2 years ago it was on the growth of healthcare during Obama. So everything was Obamacare and attack, especially from the right side of the fence. And not being that they're right, it's just this assault. So you would think intuitively all this negative news and healthcare going to be free, that what a burden that would be, that this would be the worst industry, and the insurance stocks and the hospitals took off in a 45-degree angle. I mean, some of these stocks were up 500% and 800% during that 8-year run under President Obama. Totally contrary to thinking. I'm just working on a new paper on Russia. Ever since the Crimean War, and all of a sudden, Russia's being weaponized against Trump, and there has to be collusion. There's no way Trump could ever win, and there's assault. Got to blame Russia. The Russian stock market has outperformed America during President Trump's term. There's such pervasive negative news, and oil went up, oil crashed, and oil is 50% of their cash flow for that country. It's an important part. It's interesting that you have to sit back and say, okay, what are they weaponizing? COVID-19 has become the weapon to dethrone President Trump from a second term. And you can see no matter what he says, good or bad, is always going to be negative, and it'll be spun that way. But the quants don't care. That's what I love about it. It's agnostic. It's politically agnostic. It's religious agnostic. And where do they look at? Just the patterns, the momentum of the data, the extremeness of the data, and they buy the stock market. So in a zero interest rate environment, the stock market's making new highs. Well, don't fight the Fed is something I heard 40 years ago when I got in the business. And the Fed is printing lots of money. And so are other bankers around the world. And the formation of capital is morphed. So zero interest rates, buy stocks paying dividends. Buy stocks that have the ability to pay dividends increase. And you know what's thrilling about this journey is gold stocks for the first time in a decade at the end of March, the 100 producers we follow around the world had a free cash flow yield as an average. Very important. December they didn't. September last year, June of last year, no, but now they do. June is even better. So the generalists, the non-gold stock buyer, just buying free cash flow, buying momentum and revenue, et cetera, are buying the gold stocks. So when we take a look at our ETF GoAU coming over those March lows, it's far outperformed, more than double bullion's rise. And I think that you're seeing this everywhere, that the other indexes, Barrick and Newmont, advertise now in their press releases that they have free cash flow yields. So they're attracting a new set of eyes.